Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we are getting an update from Santacruz Silver Mining. Santacruz Silver is traded on the TSXV under the ticker SCZ and on the OTCQB under the ticker SCZMF. And I'm joined today with the executive chairman and CEO of Santacruz Silver, Arturo Préstamo. And Arturo, it's always great to have you on the show to get an update, especially when it's on the back of another record quarter for the company as it relates to many year-over-year increases. Now, when you look at the Q2 financials, there are so many numbers in here, and I'll just rifle off a couple of them very quickly here. A 4% increase year over year in revenues, but a 59% increase in gross profit, a 1,348% increase in net income, a 691% increase year over year in cash and short term and long term investments. And there's a lot of other records in here. I'm not going to go through all of them, but you can tell that the company is doing much better financially year over year. Now, some of that is because you have higher silver prices and it's helping out the economics, but some of it's also a lot of the optimization work you've done at a number of the mines in the portfolio. So, I guess from a high level, walk us through some of the key takeaways you want investors to know about the financial strength of the company as you closed up Q2.
Thanks, Chad. Thanks for having me here. It's a pleasure for me to be here with you and your audience. Yeah, as you will point out, revenues were strong on the quarter. Definitely, metal prices were a lot of help. And as you point out, we have been working through achieving efficiencies across all of our mines over the last year and a half, and we're getting there. This is a job that, or a work that will be done on a daily basis. This never rests. So we'll keep doing and we'll keep looking for efficiencies, areas where we can save or do things better. That is our common way of doing business. No doubt, numbers are robust with a net profit of $20 million and a treasury that we're building literally week over week. No, so we're happy to see how things are moving nowadays and how the mines are looking into the next coming quarters and beyond.
Well, another factor we should bring in here is that in addition to generating good revenues and gross profits and net income, you're also still paying down debt. And when I go back and circle back to a conversation we had maybe just a couple months ago about how you are paying off Glencore early, you picked up these mines in Bolivia from Glencore, but by paying off the $40 million early in the loan to Glencore, it saves you $40 million because you're doing an early payment and you're getting closer to the end of the road there. So just what can you say about the paying down of debt and that transaction with Glencore?
That's a very good observation, Chad, and you're correct. We still have two more payments to go. One during the first week of September, September 5th, and the last one, the last week of October. Very likely you will see that we will amortize both of them on the 5th of September because we have a strong treasury today, north of $65 million and building. So, why waiting another 3 weeks after the next payment? So, very likely we will amortize the full amount, and that will leave us free of this $40 million accelerated payment and of course, saving another $40 million into our treasury by getting into this acceleration program schedule. No? So we're very happy to accomplish that very soon and looking forward to do that.
Well, and so considering the strong balance sheet that you have and all the cash in the treasury, and then you'll be knocking out those two last remaining payments to Glencore, maybe at the same time. Some people would wonder, why are you doing these promissory notes on San Lucas in Bolivia? Now, you do those in Bolivianos, but you did another 70 million Bolivianos, a promissory note that's at 7%, announced on August 11th. So some people may wonder, why do it at all if you have so much money on the balance sheet?
Right. Well, that's also our philosophy of achieving efficiencies across the company, no? Not only in our operations, but as well in our treasury. The best way to manage our treasury right now and our balance sheet is to take advantage of money that it's efficient for us, no? So issuing those 70 million Bolivianos at a 7% all-in interest rate, it was a no-brainer for us and a very efficient way to use our balance sheet as well. So that's the main reason, because as you will point out, we have a significant amount of money in our treasury. Why the need? There's no need actually. It's just achieving efficiencies, and we have that in place. Our team in Bolivia has done a fantastic work from awareness in the local market. So yeah, it was just trying to access efficiencies across the whole company.
Well, is some of that because of the exchange rate that the money that you hold on your balance sheet in the treasury is also in US dollars?
Well, that's correct. Yeah, that's a good point. We use the Bolivianos for working capital purposes down there in Bolivia. With those monies, we buy more ore out of San Lucas, more ore from the small miners, and we have more product to process and more revenues, which are converted to US dollars once we process and do the corresponding exports of these metals. So, yeah, it is just efficiency at its best, what we're trying to do with those promissory notes.
Well, it brings up an interesting point about San Lucas and how it fits into the equation. Just for people listening that are maybe not familiar, you have a number of mines. You have a mine in Mexico, the Zimapan mine. Then you have two mines, Bolivar and Porco, that are part of Illapa, and then really two mines contributing to Cabalo Blanco, Tres Amigos and the CQ-CQT mine. But San Lucas is this feed sourcing business where you're buying the ore from local artisanal miners and local small scale miners. And then you've got a trading company where you blend all those together and resell them and process them at your facilities. And San Lucas kind of saved the day in Q2 when you look at the operations because you had a few complications at the Bolivar mine, but San Lucas nicely made up for it. So maybe to speak to the importance of San Lucas, and then we'll dive into some of the other mines.
That's a good point, Chad. And actually, as you point out, I mean, San Lucas came to offset the lower production that we experienced at Bolivar Mine due to the watering process at Pomabamba and Nane veins. Both of those veins are the most or the highest silver grade veins at the Bolivar Mine. So yeah, San Lucas came in on time and offset part of the lower production for the quarter. And that's part of the business strategy, business model that we have in place in Bolivia. San Lucas definitely, in addition of being a great business for us, when you have a hiccup here and there, as it proves now with Bolivar, it always comes to save the day, as we may say, right?
Yeah, and it's just nice to see. I think it also engenders a lot of local stakeholder support in the company. First of all, these promissory notes you did, gets local stakeholders in Bolivia, but also the ability to do the right thing in Bolivia from three different ways. You're being helped as a company because you've got a nice margin on San Lucas. The local miners are helped because they have a way to process it and get paid in a proactive way. And the government's happy because they get tax money. So everybody wins. But let's talk about the mines themselves. And I guess let's maybe start with Bolivar since we just talked about it. You had some of the water issues. You're mostly through that now, and you're looking forward to a better Q3 and especially a better Q4. Let's maybe start at the Illapa mines at Bolivar and Porco.
Absolutely, Chad. Well, Bolivar, as we all know, I mean, in Q2, we experienced some watering problems at these two veins, that the watering process is going in line to what we budgeted, into what the engineers have designed. So by Q4, Bolivar will be back on track, and we'll see again Bolivar producing higher silver metal contents. So as for Bolivar, we're in good shape and looking forward to have this mine again running on budget. No, Porco, as you know, is a narrow vein system mine, very narrow, but we're doing very good progress, advancing with more crews or teams of miners, as this mine is very artisanal. So we mine with jack legs and cotton peel kind of low volume, but less dilution or less dilutive mining methods. So Porco is going on budget as well. It's a small mine, as we might recall, produces around 500,000 ounces silver equivalent on a quarterly basis. Nonetheless, it's going on budget. So we feel so far that the year is going to be on budget, even though we have these hiccups at the Bolivar mine.
Well, now let's talk about the mining complex. A couple different mines contributing at Caballo Blanco and being processed at the Don Diego mill.
Right. Caballo Blanco, as you may recall, used to have three mines, the Reserva, Colquechaquita, and Tres Amigos mines. We identified that the best way to run this complex of mine was running Colquechaquita and Tres Amigos together, and Reserva mine was run or separated and run through San Lucas. All the ore that Reserva mine produces, it's sold to San Lucas. And in that sense, we're achieving efficiencies metallurgically speaking. So we have improved our recoveries, we have improved the silver reporting to the lead concentrate, which is paid better. So Caballo Blanco is going along also on budget, and we expect to keep doing more progress throughout the year at Caballo Blanco in order to secure 2026 and beyond with a very strong production as well.
Yeah, nice to see Tres Amigos and Colchetaquita humming right along, and then the Reserva mine, like you say, reporting over to San Lucas. So it was an interesting solution that your team came up with, and it works better all around for the recoveries as well. So let's also pivot to Mexico because you still have the Zimapan mine there growing, and I think you're very excited about the Carousel level 960 and how that's going to play into the future of the mine. So talk to us about how Zimapan performed in Q2, but maybe also looking forward to how it can grow.
Absolutely. Actually, as we saw when compared Q1 to Q2 in Zimapan, we saw the all-in sustain coming down. We should keep improving our all-in sustain cash cost at Zimapan. And the main reason is that the important investments to prepare and have level 960 ready for production, those investments had already been done and have already been reflected in our financial statements. So now the mine is ready and on budget to keep delivering more ore from level 960. So we expect around 35 to 40,000 tons by the end of the year coming just from level 960. And that should reflect in slightly higher silver metal content and a little bit more copper. But if we remember, Zimapan mine is a high volume mine. So even though the head grades increase just slightly, 10 grams of silver and maybe 0.20% copper, taking copper to 0.40 overall, those two small improvements will add significantly to the financials of that property. So we're very excited about how Zimapan is looking, and we confirm that our investments throughout the last year and a half have been the appropriate. So we expect to see also a good year for Zimapan, not only this year, but the following year and beyond, because level 960 is proving to be a significant area for the future of this property.
Well, and you brought up an interesting point, and we've discussed this in the past, Arturo, but I continue to read or see comments in the marketplace that Santa Cruz is mostly a base metals company and it doesn't have that much silver, but that's just not true. You have almost half of the production in silver, and as that Zimapan mine grows, that those incremental changes in silver, that's only going to help the cause. Maybe remind people listening that yes, you're probably metallic and yes, you have a lot of zinc, but you have quite a bit of silver exposure, and so these higher silver prices absolutely impact the company in a positive way. But remind us of the proportions of different metals that you produce.
Oh, that's a good point, Chad. And actually, revenues come today 50-50, no? 50 mostly from zinc and 50 from silver. But very interesting, now that we're building our treasury, we are paying out Glencore. What's next? I mean, remember, we have in our portfolio of assets, we have the Soracaya property in Bolivia, which is mainly silver, pure silver, technically, no? So we're going to start putting a lot of effort into this mine. And this year, we're starting now with significant works at Soracaya. And with the idea of bringing that mine into production, I don't want to bring up a date right now when we will reach commercial production. I'll leave that for later. But we're going to start doing very important works now. And very soon we'll have some announcements in Soracaya. That just to give you an idea, if you see the PEA or the resource estimate report for Soracaya, there's a PEA that was built by the former operator of this mine, which calls for 4 million ounces of pure silver in production on a yearly basis once it reaches full capacity, which is 800 tons per day. So that'll be our first objective. And I think that'll be also a contributor, a significant contributor to our pure silver production for the coming years.
Well, Arturo, I think people that are the silver bugs, such as myself, are happy. That's music to my ears to hear that you're going to have even more pure silver production down the road from Soracaya. We haven't talked about this asset as much in previous discussions, so maybe just one more follow up on it. Remind us of the resources that you know are in place and then where it's located. What steps need to happen along the pathway to production? What are the key milestones you'd have to map out over the next year and a half or so?
Right. Well, Soracaya has around 5.5 million tons of inferred resources. This is an exploration property. We're doing, as we speak, more and more exploration in the property. You have two developments where the most important vein at Soracaya is already with the two stopes ready for production. It's a small production capacity today because, of course, the mine is not prepared for production. But for exploration purposes, these developments were done. And it's clear that that'll be the path going forward to develop those areas and keep going along strike and start developing a deep. But this is a mine, Chad, that has infrastructure in place. You have already air compressors, you have all services in place, and you are close to Pan American Silver San Vicente mine. You're technically 7 kilometers from Pan American Silver. So there's power grid very close to the property. You have roads, you have already camp for our miners, facilities for our miners to be there and stay there. So it's relatively ready for a significant amount of works that we're going to start doing and getting this mine prepared. This is very exciting for us, and we hope very soon we'll be making some announcement in these regards.
Well, considering that you have that development work in front of you there, I'm sure that's where some of the budget will be going. But after you pay off Glencore, as you continue to produce at a profit, as you continue to stack up more revenue because we have higher silver prices, are you interested in going out and making any other future acquisitions, or do you just want to focus on growing the assets you have at this time?
No, that's a good question, Chad. And we are open. We have our eyes open and evaluating opportunities outside of our portfolio always, no? Our main premise is to have opportunities being very accretive to our investors. So definitely we're open to different jurisdictions, even outside of Mexico and outside of Bolivia. We have been reviewing a few alternatives that brought to our attention, but today the main thing is we'll be disciplined, we'll keep a strong treasury, we'll keep doing progress always with discipline across all the different areas in the company, no, especially taking good care of our treasury.
Well, one last question, and it's on the valuation of the company. I should admit and disclose that I am a positive shareholder of Santacruz Silver, so I'm biased in that sense. And I look at people online discussing how much the stock has moved up this year. And from my vantage point, I think, well, rightly so. It was really undervalued just compared to your peers. But even after the move you've had this year in 2025, which has blown past a lot of other companies, a lot of people feel like, oh, well, maybe I missed it. But when I look at your valuation compared to other peers that are producing, especially when you can think about 18 million silver equivalent ounces on the year as your guidance, I still see you guys as undervalued. So maybe speak to your valuation and how you would stack up to peers.
Sure, Chad. Let's say how I like to see it. It's you have an EBITDA, 110, $120 million a year. You don't have debt other than the promissory notes, which are in Bolivia, which are just for treasury efficiencies, and two revolving facilities for the same purpose for treasury efficiencies in Bolivia. You have no debt. I mean, other than the Glencore payment, which will be fully amortized very soon, you have no streamings, you have no royalties. So technically, the cash flow comes to contribute to the company's balance sheet, every penny of it, no? So that being said, I think we are today at 3.5 enterprise value EBITDA, and our peers are significantly higher. But I think that the markets will recognize this eventually, and we should see our share price revaluating to a more appropriate level. I think the markets are savvier and more knowledgeable than me into what level could be appropriate. But definitely, I think that today's valuation it's still very low to what the balance sheet of the company and the engine of cash flow that this company is producing nowadays. No, so eventually the markets will recognize this. This is my humble opinion. We'll keep making more awareness about the health of the company. I guess investors will see that we're walking the talk and delivering, and also we are being cautious with our decisions on where to allocate our monies and how to bring a mine or not into production. So eventually, those things together will be evaluated, I think, and in my opinion, we still have lots of room to go.
Well, I think that's a good spot to wrap it up on, and I agree that, I think your multiples and your valuation compared to peers could go up substantially from where they are now, just to even match their peers, not necessarily to even get at a premium valuation. And some of the peers still aren't at their full valuation. So I think the whole sector could re-rate higher. Maybe the investors just haven't fully digested how impactful these higher silver prices are going to be, especially if they stay up here for some time going forward for all silver producers, but especially for Santacruz Silver. So we'll definitely keep following along with it here at the KE Report. I definitely appreciate you spending some time with us, Arturo, and breaking down the numbers from the Q2 financials. We're two-thirds of the way through Q3, and it's looking like a pretty good quarter because we have even higher prices. So we're looking forward to getting back together for Q3. And for those of you listening in, if you want to follow along with all the news flow from the company, definitely click on the link below in the show notes. It takes you right over to the Santacruz Silver Mining website, right to their news section where you can sign up for updates or follow along with the news flow. And I'm sure we'll be talking with the company again down the road. Arturo, as always, looking forward to our next conversation.
Chad, it's always a pleasure for me. Thank you for having me.